In this month's macro view, we have two items that we continue to track: EU debt concerns and European economic uncertainty. On the MetalMiner site this month, we reported that the Federal Reserve stole the show at Davos this year when Ben Bernanke announced from Washington that the Fed expected to keep interest rates at or near zero until the end of 2014. He also signaled that the Fed is considering further quantitative easing as an option. Employment remains one of the Fed's major concerns, along with the belief that a combination of high unemployment and depressed property prices will make for sluggish growth likely to continue for the next few years. Also, the IMF reduced its forecast for global GDP growth through 2013 by 0.7% for this year and 0.6% for next year. 2012 growth is now forecast to be 3.3%. Currency volatility continues to underpin commodity performance. The euro continued its fall against the dollar and the Japanese yen through mid-January, then began to rise toward the end of the month. However, further gridlock could harm the euro again in the coming months. Meanwhile, oil continues to hover around $100 a barrel. The Baltic Dry Index fell hard in January, down roughly 60%. Although the index is affected by many variables, it's hard not to question how much the slowing Eurozone growth is weighing on the Baltic Dry Index. Are we already in a European recession? Only time will tell. Finally, the S&P Volatility Index has been falling since our last outlook, remaining well under 25, which indicates less market volatility. This may signal a better time to buy. The latest base metals poll results from Reuters show the highest projections for copper this year are $9,063 a ton from Harbor and $9,000 a ton from Barclays Capital. It seems none of the big firms and banks expect a price collapse. The median forecast puts copper at $88.59 a ton. Aluminum will fare only slightly worse than copper. Analysts expect a median price of $22.57 a ton, down 6% from last year's average of $23.98 a ton. Any comparison ends there, though, because cutbacks and closures are increasing. Very few analysts expect the market to shift into supply-demand deficit this year. Of the 15 who expressed a view in the Reuters poll, only Harbor, FC Stone, and Thomson Reuters GFMS are forecasting a shortfall. Looking at stainless steel, nickel prices have been steadily increasing during the last month, hitting a high spot price in the LME of $21,350 a ton on January 29th, an increase of about 19% since the start of the new year. As China's stainless steel consumption continues to rise, it is choosing to meet its chrome demand by sourcing overseas ore and producing chrome alloys domestically, with important implications for producers elsewhere, especially in South Africa. And just an update on conflict minerals. The SEC has missed a second deadline for the publication of corporate disclosure rules relating to the use of conflict minerals, in response to the provisions of the Dodd-Frank legislation passed 18 months ago. The rules are now scheduled for release sometime before June. In this month's one-on-one segment, we spoke with Roger Ferch, Executive Director of the National Steel Bridge Alliance, and Jennifer Diggins, Director of Public Affairs at Nucor, about the Buy America provisions and how they affect material sourcing for major infrastructure projects such as bridges.
Jennifer, can you tell us how the Buy American provisions or the legislation is actually supposed to work?
Absolutely. In theory, Buy America regulations were put on the books to really promote the use of domestic materials in the building of this country's infrastructure. It's through that building that we create jobs, we put people to work. For example, in the steel industry, those are good paying, highly skilled jobs that for a lot of people in different communities, that's their way into the middle class and always has been. And over the years, we've seen a weakening of those laws, unfortunately, due to lack of congressional intent or a misunderstanding of congressional intent. And as you see projects go through the process of moving from federal to state to local, there can be misinterpretations of exactly what congressional intent was behind Buy America regulations.
How are the laws being circumvented?
Right now, there's this misconception that Buy America covers every federal dollar ever spent in every federal agency and every project, and that simply is not the case. It applies to a thin slice of Department of Transportation and the Highways and Transit section of the DOT. And it's through those projects that you see highway building and bridge building, railroad construction. Those are the types of projects that are subject to Buy America regulations. And when the federal dollars get issued down to the state, there are opportunities for circumvention. There are times where big projects get green-lighted by the federal government and the state government will turn away federal funding, and then Buy America regulations don't apply. From the steel industry's perspective, when you look at the way Buy America is structured, we feel that it's completely fair and that there are opportunities for officials on the state and local level if the price of domestic product is too expensive or it's not in the public's interest, or you don't have access to that specific product to meet the design of the project that you're working on. There are waivers that can be obtained in order to source through foreign, to go foreign. So we believe all of the appropriate mechanisms are in place and that there should be no circumvention, but we're continually running into issues when federal dollars are going through different state agencies, federal agencies other than the DOT, and once that money hits the state level, what they actually do with it.
Roger, could you tell us about the mission of the National Steel Bridge Alliance?
The National Steel Bridge Alliance is a division of the American Institute of Steel Construction. The mission of AISC, or the American Institute, is to promote structural steel as a material of choice, grow the market share for steel structures, and as a division, the National Steel Bridge Alliance does the same thing for steel bridges. We try to help the designers, we help the people building the bridges to provide an economical project that meets the needs of the public.
What have you seen in terms of U.S. bridge projects and their development vis-a-vis the Buy America legislation?
It's been a battle for a long time that there's always surges of potential import competition that come in with attractive pricing on the surface. They're basically talking about an initial price, which is tempting to a DOT or an owner's agency trying to tell their people, well, maybe we can save a little money doing this. The Buy America regulations, however, are quite strict. They provide threshold values that unless the savings are this, you need to procure this domestically to maintain not only our infrastructure, but to maintain the factories and the skill sets of our people and our workers so that we're prepared in the case of a calamity or a rapid project, that we have the skill sets we need to also repair our own infrastructure.
Can you walk us through the cycle of how these projects come to fruition and where in the process the actual outsourcing function is added?
Congress passes a bill, hopefully in a timely manner, and replaces it that provides some level of funding, and then there's formulas that distribute the funding down to the states. So the state will then take their list of projects, take the funds they have, match the two together and say these are the most critical projects, these are the ones we want to build. You've got the federal piece, you've got the state match. Some of our roads and bridges are toll bridges, so they've got toll authority funds, but at some point it appears that the cost and the construction costs may not be in balance, or there's this attractive offer, geez, if you do this portion and outsource it overseas, we can save money, which will bring it, and that starts the temptation, which then leads to how can we get around the federal regulations, how can we keep the federal dollars but use them differently, and that's where it starts. It's usually on the large projects, sometimes it could be on the small projects, but it's usually a case where at some point in time you've seen an apparent cost crunch, and this appears to be the easy fix.
Has the public been fully informed as to how these projects are actually delivered?
The public hears what the agencies want them to hear. And the one that has been in the news over and over again this past summer has been the San Francisco-Oakland Bay Bridge. Well, here we have a project that first said we have a deficiency when it lost part of one section in the Loma Prieta earthquake in 1989, and in 2012 we still haven't replaced it. Well, we have an agency that's basically saying we did everything right, we saved money by outsourcing this major piece to China, but in all the articles I've read, in all the news interviews I've seen, I haven't heard them once say and our construction costs are $290 million more than the initial contract, nor have I seen that we've already granted 20 months of time extensions to this contractor. So they will tell about the savings they thought they made when they made the initial procurement, but they are not telling the public that they continue to approve change orders, they continue to approve time extensions. So what is the real savings? And I think really anybody that wants to do an economic analysis, construction cost is one thing, but then you also have the multiplier effect of the wages. If they stay in the United States, then we also collect income taxes, state collect taxes, workers go home, buy groceries, pay sales taxes, huge multiplier effects on dollars that are spent in the United States. Once they go overseas, they're gone forever.
I think we'd love to hear from both of you on this one, but what could Congress do to beef up the Buy America provisions?
From the start, Congress could just make sure that they are clear on what they're asking people to do. One of the things that's been really frustrating to me since I've been trying to understand Congress, what they think they put in legislation, and then you go and talk to the states and what they think they hear about the legislation, is there's a lot that seems to be lost in the translation. The number one issue on Buy America is an issue called segmentation, that a bridge may go from shore to shore, but they seemingly allow departments of transportation to figure out this isn't really one bridge, maybe it's 3 bridges. So they award it as 3 contracts, push all the federal dollars into 2 of the 3 contracts, and then take the 3rd contract and do whatever they want. It's called a segmentation issue. That'd be the number one thing that Congress could stop that would help the major projects.
I completely agree. That really is critical. I think a willingness to embrace the rule as it's written on the books as well, and have a clear funding formula for how federal dollars get allocated, and a clear understanding between the federal level and the state level as to what congressional intent is on Buy America is also key. And then look at ways to expand it. We have a crumbling infrastructure in this country, and it covers all segments of the economy and all segments of what we use in our daily life. Let's think about applying Buy America as a way to create jobs during this tough economic time, a way to create demand for our domestic product, and really a way to give domestic manufacturers a competitive advantage to help rebuild this country in a meaningful way. And I think once everybody understands that Buy America really could be looked at as a job creator and a facilitator to get us out of these hard times, once they realize that and recognize that for what it is, they'll understand that this is a no-brainer.
You and your company can't afford to miss the MetalMiner Spend Matters Conference Commodity Edge, Sourcing Intelligence for the New Normal. For all the details on Commodity Edge, including how to register, just go to metalminer.com and click on the conference logo on the top left.